Good morning, good afternoon, good evening from London, United Kingdom. My name is Dipesh Patel, editor of Trade Finance Global and host of the podcast Trade Finance Talks. This time next week will mark a momentous time for global trade. The Electronic Trade Documents Act, or ETDA, comes into action, enabling truly paperless digital trade. Since the 1400s, not much has changed when it comes to transport documents. The bill of lading, which is a receipt of cargo from a shipper, is one of the most important documents in multimodal transport, now representing 40% of today's containerized transactions. Trade remains cumbersome, paper-intensive, and resource-consuming. It's predicted that 50 sheets of paper are exchanged with up to 30 different stakeholders in just one simple transaction. So what if we could get rid of this logjam of paper? An electronic bill of lading could save 6.5 billion US dollars in direct costs and unlock up to $40 billion in new trade volumes globally. In today's 5-part tradecast, we're hearing from 18 experts from around the world talking about what's next for the Electronic Trade Documents Act. It's a small 6-page bill, but its impact is global. Here at TFG, we're breaking that act down. To start off with, we'll discuss the act itself, an introduction to it, before discussing in our second session how banks, non-banks, and lenders are reacting and what they're doing to prepare. In session 3, there's a fireside chat discussing how the Act complies with global trade rules. The fourth session will take a view from the shipping and logistics industry, and we'll close with our final session on reliable systems, a focus on technology and systems. This webinar series is in partnership with the Department for Business and Trade and UK Export Finance. We'd like to thank our sponsors, Sullivan, Lloyds Banking Group, Wave BL, and Inigio. We'd also like to thank our association partners, ITFA, the Institute of Export and International Trade, the D&I Initiative, and the British Exporters Association. So now on to our first session, an introduction to the Electronic Trade Documents Act. Joined with me on this panel are Lord Holmes from the House of Lords, Ada Igboemeka, Deputy Director for Digital Trade at the Department for Business and Trade, Chris Southworth, Secretary General of the ICC United Kingdom, Luca Castellani at UNCITRAL, Geoffrey Wynne, Partner at Sullivan, and Sarah Green from the Law Commission of England and Wales. Welcome all.
Thank you.
So, Lord Holmes, let's get you to start. Can you give an overview of the bill now in act, and can you explain what you've said is the most important bill that no one's ever heard of?
Thank you, and it's a pleasure to be part of this tradecast on exactly as you say, the most important bill, now act, which no one has ever heard of. That's how I've described it. I was lucky enough to be part of the special bill committee that took the Bill Now Act through Parliament. And the reason why I describe the Act as the most important that no one has heard of is because of its potential impact. You gave some numbers in the introduction there, but in reality, its potential impact is as good as infinite because of its transformational potential. It's the first piece of legislation in the UK which has really dealt effectively with the potential uses of new technologies. In this case, currently blockchain or distributed ledger technology, but the Act is rightly and beautifully neutral in terms of what technology can be used. It sets out a set of criteria which have to be achieved by that technology, but it's rightly future-proofed in terms of leaving open the possibilities of technologies that are still in development, being able to satisfy the requirements of the Act. It was a tremendous demonstration of how fortunate we are to have the Law Commission in the United Kingdom, and Professor Green's work as common law commissioner at the Law Commission, coming up with a draft for us to consider in Parliament. And as a result of her team's excellent work, it wasn't a massive piece of work for us to consider because the drafting was so well put together. It really addresses the central problem in international trade currently, which is so disappointingly papery. It offers economic, environmental benefits because of the possessive nature of trade documents, i.e., you hold the paper, you hold the goods, essentially. If there is distance between those two things, say, for example, a ship is waiting to come into the port of Singapore, but the trade document is at Heathrow, currently someone has to take that document, board a plane, fly to Singapore, unite the paper with the goods to enable transfer, currently between 7 and 10 days. The Electronic Trade Documents Act collapses those days into minutes, delivering economic, environmental, social benefit way beyond international trade. And in reality, though I think it's been incredibly important that we put the bill into an act, onto statute, of course it is, but that is just the start point. The real work starts now to communicate to everybody across the trading ecosystem, particularly those small and medium-sized businesses that currently don't export, to enable them to see the economic benefits which could come to their business. So hail the Electronic Trade Documents Act, ETDA, or if you will, every trader deserves access to the economic benefits, to the environmental benefits for all of us, access to trade enabled through electronic trade documents, benefiting trade economically, environmentally, benefiting us all. That's the mission for all of us. Let's make it so.
Thank you, Lord Holmes. Ada, can you give an overview of the past to the present on how the Department for Business and Trade has worked with other trading nations and multilaterals such as the ICC or the WTO to promote digital trade negotiations and also standardized wordings to grow and promote digital trade agreements?
Thank you very much for inviting me to speak about this really important and really exciting topic. So my team is responsible for negotiating digital trade provisions and initiatives in our suite of international trade agreements. So these are free trade agreements that we negotiate with single countries, but also multilateral initiatives across the World Trade Organization, the G7, the G20. So my team of negotiators, quite simply, encourage other countries to adopt commitments similar to the legal reforms that we've introduced in the Electronic Trade Documents Act in the UK. So, of course, this is going to make trading faster, cheaper, and simpler for UK businesses that are exporting and importing goods. So, firstly, just to give you a bit of a sense of what that entails, at the World Trade Organization, the UK is a leading voice in the ongoing e-commerce joint initiative. That's a multilateral trade agreement that covers about 86 countries that are involved in that. And it looks at digitalization issues across the trading process. So the joint initiative includes several types of articles that are relevant to this legislation. For example, paperless trading, e-contracts, e-signatures, and electronic transaction frameworks. So these commitments will ensure that documents in electronic format are accepted by customs authorities across the member states. It will also encourage participants in the agreement to align their legislative frameworks with the UNCITRAL model laws on e-commerce. So this promotes digital trade across the world. In our bilateral free trade agreements, which are country-to-country trade agreements, we try to achieve similar commitments from our trading partners. So if we look at some of the previous agreements that the UK has negotiated and signed, for example, with Australia, Japan, New Zealand, and with the EEA, EFTA countries. Our digital agreements, also with Singapore and Ukraine, have similar commitments as well. So these agreements continue to seek similar commitments in our suite of ongoing negotiations with our trading partners. Outside of our bilateral and multilateral trade agreements, we have also stepped up our work in the G7 and the G20. So this complements the work we're doing at the World Trade Organization and through our bilateral free trade agreements. So for example, at the G7, we've built on the positive outcomes in 2021 and 2022 under the digital trade track. We're pushing for greater collaboration between our G7 partners and industry to share updates on initiatives that they're already doing to facilitate the adoption of electronic trade documents, and to share experiences together about how to remove barriers to adoption. The UK's primary objective of this type of engagement is to secure recognition amongst all G7 members of the importance of digitalization and building on the UK brokered digital trade principles from 2021. At the G20, India has been the chair, and they have really been looking at at a number of proposals on trade digitalization. And we've been looking at how to constructively engage with G20 country members to complement the Electronic Trade Document Act. So this complements and works alongside the work we've already done at the G7. We're also participating in a wide range of bilateral engagement outside of formal free trade agreement negotiations. These are what we call enhanced trade partnerships. So countries that we don't quite have binding legal trade agreements with, but these are dialogues, and it helps to look at how we can use these engagements to advance the digital agenda. Then we're also working with the International Chamber of Commerce to ensure digital trading systems are harmonized and interoperable across a range of countries. We're encouraging this strong and proactive industry voice, pushing both domestic and global action, and we're supporting their Center for Digital Trade and Innovation and their Digital Standards Initiative. Domestically, lastly, to say that we're working with businesses that face barriers to making the most of the added benefits of this legislation. And they're supported by my team, but also others within the Department for Business and Trade, but also across government, other departments such as HMRC. So there's a range of initiatives from legally binding bilateral trade agreements, multilateral agreements within the World Trade Organization, but also working with business associations, the ICC, etc., and also sort of supporting individual businesses domestically that face barriers.
Thank you, Ada, and hopefully the internet connection is back on, but we will re-edit those bits out. Chris, there are 44.5 million paper documents lodged in trade each year. How does the ETDB change this, and what benefits does this bring to corporate banks and more widely the global trading system?
There's actually 4 billion paper documents that float around the global trading system at any given time. So we know it's a real pain point. And if you look at business surveys, typically 35% of companies, particularly SMEs, always complain about, what's generally called paperwork, bureaucracy, red tape. And that actually does apply to this whole area. It's the paper that's getting in the way and becoming a real burden and a barrier. And that's quite specific in those surveys. However, we also know that 45 to 65% of companies want to go digital and just remove that pain point. And of course, the biggest beneficiaries here are actually, one, SMEs everywhere, but also low to middle income economies, where those burdens have a disproportionate impact in the emerging economies than they do in the more developed economies, where technology systems tend to be a little bit more capable. Just to pick up on a point from Lord Holmes, it's really important because there are three layers of trade. There's the finance layer, there's the paperwork layer, and then there's the physical shipment layer. Those three layers are generally disconnected. They have their own processes and systems, all operate in paper. And as we move from paper to data, those three layers collapse so that finance can transact at the same time, in real time, in minutes, not months and weeks, at the same time as the physical shipment and the transfer of possession of the goods. So this is a really unique opportunity, and I totally agree. This is the start line. It feels like it's been a long journey to change the law, but it's huge in the context of world trade. English law has a much bigger impact on global trade because of the history. 80% of bills of lading operate on English law worldwide, and 60% of global trade finance does too. And then shippers, insurers, also tend to operate on English law as well as companies. So this is a real game-changing moment, but it's the beginning now of the process to engage with the corporate community and start digitalizing supply chains. As Ada's quite rightly pointed out, we've got good corridors, we've got real opportunity, that legal environment now with English law. It's the first time we've had a scalable legal environment in which you can transact digitally. That's what can all happen on the 21st of September onwards. So this is a great opportunity. We've got to grab the opportunity. It's not just going to happen. We have to now build up the business cases, engage with our corporate community, get down those supply chains to the SMEs in all parts of the world, not just the UK, and make sure, important, we get the benefits. It's all about the benefits. We know the prize is big, but we've now got to make sure those benefits, travel down to the companies where it really, really matters.
Thank you, Chris. It's really important to connect the physical and financial supply chain there. Luca, can you talk us through the UK's approach to adopting the equivalent of UNCITRAL MLETR, the Model Law on Electronic Transferable Records, and the reasoning behind the UK's Electronic Trade Documents Bill? Because it's not quite the same, is it?
Thank you. Well, what I can say is, I can share some views from the perspective of someone familiar with the model law, Melita, as we call. Of course, you may expect different opinions on the issue of whether the two pieces of legislation are close, how close they are, and that's in part also in the nature of the legal thinking. I personally see many elements in common, but of course there are some differences, and of course Sarah Green is in a much better position to explain why there are some differences. Now, the background, Chris just mentioned the importance of English law, no doubt about it, especially as a law of choice in international trade and international carriage of goods by sea. At the same time, UNCITRAL has prepared model legislation on electronic transactions and electronic signatures that has been adopted in more than 100 states. So that's also meaningful. And we want to bear that in mind because we want to have seamless interaction between English law and 100 states that have already adopted, especially the model law on electronic commerce, but not only. And we have already seen the bigger picture very, very well described in terms of existing and ongoing commitments in trade agreements and the need to facilitate digital trade. From a legal perspective, we look at principles. It has already been saying both pieces of legislation are technology neutral. This is incredibly important. Both aim at giving legal recognition to the use of documents of title in electronic form, and they do so successfully, actually. Where there is a difference is UNCITRAL traditionally has what it calls the functional equivalence approach, under which it is possible to identify form requirements or other requirements that are related to the use of paper and formulates some rules that address those without changing the substantive law. That's in the nature of the mandate of UNCITRAL, which is an intergovernmental organization and therefore can act only within the given parameters. Of course, a state may decide to change its law anyway it wishes. So there is this difference in the ETDA. There is this statement that possession applies to documents in electronic form, which are intangible. I think this is a great topic for a doctoral dissertation. I'm not so sure, and I will explain why. This has a practical impact. When we go to the details, the legal details, in my opinion, it is possible to see. Maybe here I'm being too optimistic. Well, but I don't think so. When we look at Section 2 of the Act, the definition of electronic trade document, we see those elements that are also in the model law, like singularity, integrity, control, and so on and so forth. So to me, there is a certain correspondence in between the two. What is really important is subsection 5 of Section 2 on the reliability of the systems. And you said you will have a dedicated webinar on reliability. To me, that subsection is really close to the corresponding provision of the model law. And what does this mean in practice? It means that the systems to manage these electronic trade documents or electronic transfer records will have to meet the same requirements. And therefore, they will be able to manage the documents regardless of the choice of English law or other law. This is incredibly important, but it's even more important when we think that we are talking about open ecosystems, which are interoperable. So in my opinion, it's really necessary to highlight the common element to make sure that there is this data flow of trade-related information that we can benefit from, and we shall avoid giving the impression, because to me it's just an impression, that any legal difference may create a new obstacle to it. Actually, no, it's very clear from the policy, and to me it's also quite clear from the details of the law. Although, of course, the two pieces of legislation come from different legal tradition, they are, to the non-expert, they may seem different optically, but to me, not in substance. Thank you.
Thank you, Luca. And I guess, Jeff, a more practical question. It's a 6-page bill. It covers quite a few different trade documents. But what does this actually mean, and how does it enable functional equivalence of that paper and electronic form?
That's the key question in many ways. Yeah, it's a 6-page document, but it is accompanied by explanatory notes that go into well in excess of 20 pages. So there's a fair bit of work to do. But what does it do? It's great for its simplicity. And so my congratulations to those involved, to Sarah Green, to Chris Holmes in particular, for steering this through, because it creates specific examples of documents that can now exist in electronic form. And I would divide those into 3 different categories. Category 1, the payment obligation under the Bills of Exchange Act, Bills of Exchange and promissory notes. These are superbly simple documents to evidence payment obligations. If we can embrace this more in a trade context, you open the doors to the financing of trade and the speedy financing of trade. Second category are what you might call the rights to goods. And there's been a fair bit of discussion already on the bill of lading. But remember, this also includes mates receipts and warehouse receipts. And perhaps I might ask Sarah to think about whether we ought to be having a warehouse receipt law in the UK, because we don't really have that already. And and to Lord Holmes, perhaps another act to sponsor into the House of Lords, because that's important. And then there's a sort of sundry list, which has insurance documents, sort of key documents that need to move around quickly and be in electronic form. What does all this mean? Well, the first thing is that the permissive nature is that there is a list of trade documents, but it's not an inclusive list. That can grow. But how do you get an electronic document? It has to meet what I see as two simple tests. The first test is the electronic record, in whatever form it is, must create exclusive control to the holder. The person with the rights to that electronic document has to have exclusive control. And then the next bit, which Luca rightly addresses, how do you know this? How do you evidence this? It's evidenced in a reliable system. And that's going to be the challenge, is to find how to create an acceptable means of determining the reliable system, because that will then enable, one, the right to that document to be proved, and secondly, the transferability. That removes paper. We've talked about that, speed of doing business. Funnily enough, I actually regard ETDA as much a catalyst as being something that's just got a list of documents, because it has opened up the discussion to the digitalization of trade, which many of us want to see. So it's not just about this list. It's not just about how we've dealt with, if you like, with Melita in a very neat way. But the fact is that we can have digital documents, we can execute digital documents, and therefore I look forward to the expansion of digitalization of trade with the focal point on ETDA.
Thank you, Jeff. I think you said the word can. We can do it a couple of times there. And I want to ask Sarah a bit more about the bill, because it's permissive in nature. Is that correct? And can you explain what that means?
Yeah. So what's really important when conducting law reform, and particularly in an area such as this, where as several of my co-panelists have already mentioned, English law is incredibly important internationally in trade terms. And so it would have been fairly disastrous if we, in attempting to reform the law to accommodate electronic trade documents, had broken the law in this area, which in every other way pretty much has worked incredibly well for a very long time. So the difficulty with law reform is in making just the right amount of changes to facilitate what you want to happen without messing everything else up. And I've described this, what this act now does, that probably to people on this panel before, as laparoscopic legal surgery. You know, just going in, dealing with exactly the tiny point. I mean, it's tiny in sort of technical terms, but it's huge in terms of its potential effect, as we've said. So that brings me to your question, which is, or rather the answer to your question, which is that what we wanted to make sure here was we were facilitating progressive moves for those who are in a position and who want to make them. But of course, there are all sorts of reasons why some entities might still want to use paper, or might be forced for a while to use paper. And of course, we didn't want to prevent that happening. So in that sense, what this bill, what this act does, or will do in a week's time, is enable those organizations and those users who want to engage in electronic execution to do so without depriving others of the ability to transact in exactly the way that they want to do. Because of course, we also have to remember that this act doesn't just cover the sorts of documents we've covered so far. I mean, obviously, that's where it was really important for these very large international trade transactions, but it does cover all sorts of trade documents that we might not want to be in electronic form, or some people might not want to be in electronic form just yet.
Thank you, Sarah. So Chris, in a week's time, what actually changes?
That's a really good question. And just to pick up on a point, which is a really good one from Jeff, over the last 5 years, there's been a lot of work and investment on the digitalization of customs and trade facilitation processes, which is all good and all welcome. However, it hasn't had any substantive impact on the digitalization of trade documentation and finance. In fact, only 1 to 2% of documents are handled in digital form, even in the EU, which is the most sophisticated cross-border interoperable system. And that's partly because of this huge bottleneck around the handling of commercial trade documents. And that's where the Electronic Trade Documents Act has its biggest impact. It unlocks now the digitalization of the whole ecosystem, because there's a sort of general rule of thumb in trade is if one document is in paper, all documents are in paper, just because it's a bit easier and more familiar to companies who are used to that way of working. So what changes on the 21st, in a practical sense, on the 21st of September, companies can now start removing paper from the whole system. Finance, all the paperwork can move into data. Sustainability is really important here. So we all want, and we're all committed to sustainable global supply chains. You can then start to integrate trade data with your ESG data and get full transparency across your system. Security will change in the sense that we can now move to a more secure system. There is a sort of a perception out there that the current system is secure. It's not. There's fraud happening all the time because paper documents are much easier to be fraudulent than actually much more sophisticated secure technology systems. So there's going to be enormous benefits, but what companies can actually start practically doing as of the 21st of September is to start to remove the paper. There are existing providers out there who do this, quite a number of them, in fact, and have been doing this for quite a long time. So we're not moving into the unknown. There are actually quite a lot of companies with proven track records. And we can do that quite quickly. If we focus particularly around key companies and sectors where the large lion's share of value and volume of trade is happening, then what we think is we'll get to the sort of tipping point in the market where this just becomes normal. And those include things like the automotive sectors, pharma, commodities, food and drink, those sorts of big sectors shipping an awful lot of products over the borders. But the most important thing is let's remove this paper pain point, and let's start doing that on day one. We've all had it very clear in our minds as we've all been working on this new law that what we don't want to have happen is we change the law, it all comes into force, and then nothing happens. We want action on day one. The good news is that we've been running with a whole bunch of other people around the world, running pilots on digital systems, testing the use of electronic transferable records. And to date, every single one of those pilots is delivering sort of 60 to 80% in cost efficiency savings, faster finance turnarounds, cheaper finance, and more accessible finance. So we know this works. There'll be a range of more pilots, live transactions happening immediately on the 21st of September for the following 2 weeks afterwards. And then we're going to publish a whole series of case studies in a report to show companies what you can actually do. But most important, let's get rid of this paper. We've all been talking about it. We know it's a pain point. Let's get on and do the job. The government's done its job. It's now over to industry largely to start really beginning the process of now going fully digital.
Thank you, Chris. Jeff, from a legal point of view, where do we go from here to actually take advantage of the ETDA?
A lot of legal work. A lot of work been done, a lot of work to do, because if you break the ETDA down to the two components that I talked about, we've got to work out how do we establish a reliable system, because whilst the Act is permissive in nature, it lists the factors. We need to establish that you have a reliable system. And I know Chris has quite a lot of work going on, but of course, what my clients are asking for and what I think the market is asking for is essentially how can we fix quickly, how can we get a recognition by parties that the electronic record is sitting in a reliable system. So that's going to be a challenge to move very quickly, because if we can't do that and we have to wait for something else to happen, we won't be able to launch this. The second, of course, is what does the electronic document look like? How do I agree what that electronic record is going to be? Because the magic of paper, and I accept, of course, you can fraud, but the trade world, the trade finance world likes the feel, the smell of paper. It doesn't necessarily quite embrace, I don't think you yet can smell or feel an electronic record. So how do we get to that point that the electronic record, the wording on it is acceptable? And then, of course, how do we achieve the key, the transferability, so that party A and party B know that the rights to that electronic record replaced by a new electronic record is then the title, is the enforceable right. How do we enforce that? So we've got quite a lot of work to do. English law is good, and English contract law is good, and I think we'll see a lot of contractual solutions going forward. But I think the other key point, and I look particularly at government and the ICC, is education. Because we can all talk about this and we can say this is of great advantage to SMEs, but if we don't tell them in simple terms how they can achieve this, we won't get anywhere. So it's all fine and dandy to do pilots with major players, but we've got to educate the SMEs. And the education is, of course, the commercial parties to the transaction. The buyer and seller of goods and services, they are the people that have got to embrace this. It's no good us lot talking about it. With respect to my banking clients, it's no good the banks talking about it, because until we get down to that, if you like, that grassroots of somebody saying, yep, I can see what you're talking about. I can see how my sale and purchase, or my sale or my purchase and payment for it can be evidenced in an electronic record, and that makes sense to me, then we get there. Then I think, Chris York, that phrase, the tipping point, that's really the tipping point. It's not the pilot. Is suddenly a group saying, yep, we're there. We're not going to have it in paper at all. We're going to have the electronic record.
Thank you very much, Jeff. And one final question to Sarah, which is around, what happens to this bill when we go beyond the UK? Does it extend beyond the UK's borders?
Well, that's a difficult question to answer, because it's very context dependent. One of the things that is that was obvious from the beginning of this project is, of course, this entire issue with electronic trade is inherently a cross-jurisdictional one. And as the Law Commission of England and Wales, we can, of course, only suggest changes to government that affect English law directly, and then how that affects transactions, international transactions, is, as I said, quite a complicated legal issue and depends on a lot of different factors. So, two things. One, this Act only applies where English law applies, because that is the sort of limit of what Parliament can do. But it doesn't necessarily finish there for two reasons. One is that there are, of course, other similar initiatives happening across the globe, and of course, Luca and the ETDA is a very good example. And a leading example of how that is already happening, has happened, and will continue to happen. And the Law Commission is also engaged in a current project on, this all comes down to what lawyers call private international law. And we've got a separate project on how intangible assets will affect these questions of private international law. So in that sense, I think there is also, it's also worth saying that the more jurisdictions that adopt these changes to the law, the more that other jurisdictions are likely to do so. So I think there is a real snowball effect, and as we've made the point several times already on this panel, that English law is very influential. It's also used in the majority of international transactions. You don't have to be based in England and Wales to use English and Welsh law, and so I think it will have, in legal terms, a very significant impact in that sense. Of course, in some ways, although we've spent years putting this act together with the help of everybody on here, in a sense, that is, as my co-panelists have suggested, the easy part, because that's the legal bit. That is the sort of, if you build it, they will come, in the hope that once we have this legal assurance there, that parties will then start to build or adopt the technology necessary to achieve it. And just following on from something that Jeff said, I think we had to make this a statutory change in the UK, because it would have taken, I think, a very long time for the common law to have got there, and that leaves a lot of uncertainty, that a legal uncertainty that statutes can dispel. So I think in having this, we have provided greater certainty than would otherwise be there. But of course, people are generally, and entities are generally, averse to unfamiliar risks. So as we've said before, you know, if we started from here and somebody suggested using paper for these documents, I think, you know, in 2023, that we would think that was a bizarre idea. But of course, the industry is attached to paper because that's what they're used to, because as Jeff said, you know, you've got the smell, you've got the touch, but actually it's a lot less secure. So I think we have provided that certainty now in legal terms, but the practical working out of that is what really needs to happen in earnest, I would say, in a week's time.
Thank you very much, Sarah Green. And look, what a fantastic panel we've had. It's clear that the ETDA makes trade faster, cheaper, and more accessible. And in the words of Lord Holmes, every trader deserves access. Once again, I'd like to thank Sullivan for sponsoring this webinar. And also, I'd like to thank our brilliant panelists, Lord Chris Holmes, Ada Igbuamaka, Chris Southworth, Luca Castellani, Jeff Wynne, and Professor Sarah Green. Thank you very much for joining. On to our next session.
Thank you.
Thank you, Dipesh, for a great start to the webinar. It's amazing to see so many industry leaders here to introduce us to the ETDA. So now let's jump a little bit more into the specifics of the Act, and we're going to address this key question. How will financial institutions, both bank and non-bank lenders, take advantage of the ETDA? As we know, the ETDA is a permissive bill, which means that it's up to the individual institutions to adopt and implement it. FIs have an exciting opportunity here. They can be pioneers of digitalization. But first, we need to break down the opportunities for all players involved. And I'm very happy on that note to introduce our panelists, the perfect experts today to advance this discussion. Welcome to the ETDA webinar. Andre Casterman from ETDA, John Baran from Lloyds Banking Group, and Carl Williamson from UK Export Finance. John, I'm going to start with you if that's okay. How are the financial institutions adjusting their operations to accommodate the ETDA's enactment? And why is this bill important for you at Lloyds?
Hi, Natasha. Thanks for having me today. So at Lloyds, we've been on a journey to digitise documentary trade for the last couple of years. And we see this bill as having the potential to be a major catalyst in supporting the increase in trade digitisation and uptake among key industry stakeholders that's vitally needed. So since 2022, we've been exploring ways to digitise ahead of the law change and have had some well-publicised successes working with an ETDA to utilise the contractual electronic payment undertaking, or EPU, under ITFA's digital negotiable instrument initiative that Andre, who's also on this panel, was key in delivering. We've concluded over 10 transactions under this initiative and have realised tangible benefits for both our clients and colleagues within the bank. Transaction times for existing processes that utilise the paper promissory notes are down from an average of over a week to, in some cases, less than 24 hours. And we've had clients commenting on the significant removal of administration and savings on couriering of physical documents, which has led to an increase in volume and income for ourselves. So while the EPU has proved a fantastic tool, it's not a truly negotiable instrument, and we're keen to transact under the new legislation as soon as possible. As mentioned by a number of commentators so far, the Act is a simple piece of legislation that's been designed to give equivalence to digital trade documents created on a reliable system. Like the model law on electronic trade documents that it's based on, it has purposely not defined the method of a reliable system that would be required to create these instruments, and has not defined exhaustively what constitutes a reliable system. So a key task for the industry is to clearly and transparently evidence that the relevant platforms meet the criteria to ensure confidence in these new common law instruments is created. So in practice, banks will be providing access to these systems for their clients. So we have a key role to play here in supporting this piece of work. While the ICC and C4DTI are convening on reliable systems, we must ensure we maintain the momentum that needs to be there to form some form of interim agreement between the users of these platforms on what constitutes a reliable system. So I think that's the first key point I'd want to make around what we can do. Another key element would be around one of the articles of the Acts that refers to the conversion of medium of instruments. So there's the ability to convert from electronic to paper covered in the Act, and vice versa. And we know that the developing practices around this aspect will be vital to grow digital trade, as without clarity on this, we can only target the minority of transactions where all the parties from end to end are willing to accept digital documentation. Again, the Act is deliberately vague on this point, stating only that a converted trade document must state that it has been converted and fulfill contractual obligations. So I think we need to be clear on a number of points that we're working with other parties on, and as part of the C4DTI ICC working group, such as who has the right to convert the document, is it the possessor of the document, is it the issuer of the document, and what are the key mechanisms that would be required under that. For instance, would a wet signature be preferred to evidence that the paper's original, or can there be no wet signature on the document? Another key thing I think that banks can do is to ensure that they have the foundational elements in place to handle digital trade documents. If we take documentary credits, for example, we know that EUCP rules have been in place for over 20 years, but uptake has been very low, around 0.1% of LCs issued subject to the rules. This has been part down to the legal issues that we've spoken about around electronic transferable documents, but it's also part down to the policies and appetites of the parties involved. So while EUCP doesn't necessarily feel as new and as exciting as the work being done on digital trade documents, it is a standardised rule set that could be a key foundational aspect for digitising letters of credit, more widely utilising electronic trade transferable documents. So the ICC is actively promoting its e-rules and looking to support banks with their uptake of EUCP by creating a directory of users, and we're very much involved in that working group to increase usage there. It's definitely a low-tech foundation option that banks can look at in order to build the foundations for digitisation, and one that we at Lloyds have taken up, having recently been involved in our first EUCP transaction earlier this year. So just to summarise, ultimately, I think the Act represents a massive opportunity for Lloyds around the number of paper documents couriered around the world each year, and the potential reduction in transaction end-to-end time. But on a narrow scale, we've been able to prove that there's tangible benefits to digitisation from client satisfaction, cost, and an income perspective. We're keen to work with our partner banks and the wider industry to realise these benefits on a larger scale.
Lovely. Thank you very much for that, John. That was very thorough. And again, talking about in terms of the vast opportunities ahead. And I suppose in terms of promoting this, Carl, what is UKEF doing to promote the enactment of this bill once it comes into effect? And what does this mean for corporates and banks?
Thanks, Natasha. I think, first of all, just to set out that UKEF has a mission to ensure that no viable UK export fails through lack of finance. And we do this by working alongside the private sector with our banking partners such as Lloyds, that John's from, and other partner banks as well. We see the enactment of this bill as extremely important to facilitate more trade finance. As I said, we work alongside the private sector. So it's very important that we promote the enactment of this bill alongside partner banks and through organisations such as ETDA. And we're going to do that through, obviously, webinars like this, but also working on bilateral basis with each of the banks to ensure that it's promoted out, particularly to SMEs, so that SMEs are aware of the changes and that they feel more confident to approach banks and ourselves for finance. So we're going to do that with the private sector, but we're also going to do quite a lot of work internally as well, alongside other government departments. So we're very much tied in with the Department for Business and Trade. The Department for Business and Trade, I believe, are on another webinar where they'll be talking about what they'll be doing. But we sit alongside them, and we're going to be doing lots of promotion alongside them, because they are the owners of this bill going forward, and how we promote this more generally out to the SME community. So we've already got plans around what we can do with DBT in terms of, again, some webinars, some government webinars, ensuring that all government departments are aware of the bill, that anybody that comes through government sort of channels will know where to go. Teams have been set up to sort of run with this. So there's going to be a lot of activity over the coming months. But as I say, we're very keen to ensure that we carry on working alongside the private sector as well.
Thank you. And is that the same in terms of promoting the bill from a financial institutions perspective?
Yes. So as I say, I think, as John put earlier, that, Lloyds and a lot of the other banks will be doing lots of promotion around this, doing this alongside organisations such as ETDA and some of the platforms as well. And we're keen to be sitting alongside that. And I think, promoting alongside them so that it is seen as a true private-public initiative. So yes, government has put this bill through, and yes, the private sector, the banks, etc., will be mainly running with this alongside the platform providers and trade organisations. But it's important that even though the bill has been passed by government, the government continues to sit alongside, say, the private sector to ensure that the message gets out there.
Lovely. Completely agreed. Thank you very much for that, Carl. And Andre, over to you, please. Are there wide implications from an accounting treatment perspective?
So definitely on the accounting treatment, we were working on this on the ETFA side as part of the D&I initiative. And the message will be that there is no change to the current practice on paper from an accounting treatment perspective. The fact that a negotiable instrument is moving from paper to digital is not impacting the accounting treatment. What is impacting accounting treatment is the use case. How the irrevocable payment undertaking that a bill of exchange or prom note represents, how is it used, in which context, and that is key. But the fact that we're moving from a paper practice that still will still continue to exist to, and we offering now a digital option on those existing instruments is not impacting the accounting treatment. And that's also going back to the 4 years ago when we launched the D&I initiative to crack really this MLETR and bring to the market support. We really saw that the key is to not only move away from paper to electronic, but also gradually add more use cases around the bill of exchange and the prom note. We definitely want to grow the use of those very established instruments practices. And this is why this innovation, MLETR and the ETD Act, is less risky than other innovations some of us have been involved with, or the industry has witnessed over the years, where we were trying to introduce new instruments into the market. And that's very hard to introduce new instruments because there is no legacy, no legal expertise, no market practice around it. And we know the ones that we try to achieve that, the innovations, I mean, that try to achieve that. With the bill of exchange and prom notes, we say this is exactly the same instrument. It's exactly the same practice, but the move to digital will enable us not only to move from paper to digital, but also to add additional value, to insert the bill of exchange in supply chain finance schemes and indeed offer irrevocable payment undertakings at transaction level more than at portfolio level, for instance. So we definitely see the opportunity to scale SME financing origination on the back of this established instrument that is moving under common law into a digital format. But from an accounting treatment perspective, our conclusion will be, because we have an expert working group on this, will be that focus should be on the commercial opportunities more than the issues related to accounting treatment.
Thank you. And I understand that in terms of adding that additional value and the commercial opportunities. I know you talked about the supply chain finance schemes. So are there implications for supply chain finance platforms and then their SME clients?
Yes, that's definitely where we see the business opportunities arising. I've always said from the beginning, 4 years ago, when we set up the D&I initiative, that if we digitize bills of lading, so in the transport world, we won't impact the number of shipments, because the number of shipments and the number of bills of lading do not depend on the digitization. However, if we make it easier for lenders, banks and non-bank lenders, to indeed issue or benefit from irrevocable payment undertakings in a much more simpler way, more digital, in a more in faster way, we could see the number of indeed promissory notes and bills of exchange increasing, thanks to the convenience, the lower cost. But it's definitely about convenience, and we know there is a crying need for more liquidity on the SME side, whether that liquidity is coming from a large bank like Lloyd's or smaller platforms like supply chain finance platforms. So there is definitely a major interest we have already witnessed, and we have already seen examples in the market like Trade Finance Global themselves, but also Mercor, Trade River, that have indeed taken advantage as part of the D&I initiative of the contract-based solution, the EPU, and the enacted technology to digitize prom notes and bills of exchange for extending liquidity to SMEs, and basically replacing proprietary supply chain finance contracts that aim to achieve the same, deliver IPUs, irrevocable payment undertakings, as collateral when funding receivables and payables, but moving away from those proprietary contracts to the standardized EPU contract that we developed on the ETDA side with Sullivan, with Jeff Wynne as part of the D&I initiative. Now we have the ETD Act coming, which is even better because indeed this is common law rather than contract law. So we could expect definitely much activity on the non-bank lender side. Why? Because they are smaller, they sometimes more agile, although I must say Lloyd's and John have been extremely agile in their adoption of the new technologies and the new legal schemes. So it's not black and white. It's not that the smaller ones are agile, the larger ones are not. It's all about people and driving innovation. But on the alternative lender side, supply chain finance platforms, we see definitely appetite to take advantage of that new common law solution, in order to basically benefit from what ETD Act offers, which is a new legal standard in IPUs. Now, that's how I see it, which is why there's much focus on indeed promoting the new option, not only to the large banks, but also to those alternative lenders that are democratizing supply chain finance in the mid-cap buyer and SMB supplier space.
Thank you, Andre. And I know you've already touched on this, but is there anything you want to expand upon about the notion of sort of new opportunities for the IPUs and institutional investors?
Yeah, and it's very important to look at the end-to-end transaction, really from the origination side, because the ETD Act is all about indeed digitizing an origination process, creating this IPU on the back of the ETD Act or on the back of the EPU and the contract law, as John alluded to and has done since a year now. Now, when the bank or the alternative lender is originating that transaction, then there is a second part to the transaction, which is all about an optional leg in the distribution space. It's optional. It depends on the lender decision to distribute or not, depending on limits, balance sheet capacity, the desire to increase velocity of the balance sheet. But definitely this is what we're doing on the TFD initiative side, is to basically automate the repackaging, but potentially in the future as well, the tokenization of indeed IPUs, whether they have been originated in proprietary formats or under the ETD Act or under EPU. That's an origination discussion, but on the distribution side, it's really transforming those portfolios of irrevocable payment undertakings into notes for institutional investors to basically get exposure on and act as partners for lenders, banks and non-bank lenders, in terms of extending more liquidity and helping the lender increase balance sheet velocity. So that's what we're doing on the TFD initiative side, with technologies offered by TradeTech and XDC Network, a layer 1 blockchain for tokenization. And it aims at demonstrating how the end-to-end transaction can basically bring capital markets liquidity when banks and alternative lenders need it to fund SMEs. And there's a very nice bridge there to establish with the ETD Act in the origination space, the repackaging option in the distribution space, and making sure that we help at industry level any type of lender, could be a bank, factoring company, supply chain finance platform, backed or not by ECA like UKEF, and making sure that the lenders get more liquidity capacity to fund the SMEs on the back of IPUs. So that's an interesting, I think, track that will develop, because at the SME level, the yield per transactions are sufficiently attractive for those asset managers, including pension funds, to get involved. If you're only talking about blue chip companies and extremely low yields, there is a mismatch between between the expectations on the yield side, whereas in SME financing, those asset managers, institutional investors are really keen, but they realize indeed that the ETD Act is bringing indeed a level of standardization on the legal side around the definition of an IPU as originated by a bank, a factoring company, or a supply chain finance platform. So it is it's an important theme that we will also discuss at the Investor Day in October, where a number of alternative lenders and institutional investors will demonstrate how they're getting on that journey.
Thank you, Andre. John, over to you for the last question. What is the wider role of financial institutions in fostering global legal reform and promoting electronic trade document adoption? And does this support sort of a sustainability objective?
Yeah, I think it does. So if we look at the sustainability side of things first, I think there's definitely a benefit here. You've probably all heard the figures that have been quoted as part of the Law Commission's review, around 28.5 billion pieces of paper traveling around the world every year that are related to trade. So that equates to a lot of trees. So there's a tangible benefit there for digitizing that paper. But I think another benefit is the reduction of the transport of those documents between parties as well. So if I give you an example related to one of the transactions we've completed, we completed an EPU purchase from three sellers acting jointly and severally who were selling land to one of our clients. If we'd have done this as a paper promissory note, as we used to do these transactions, the documents themselves would have been couriered 6 times before they reached the bank for discounting, which, as I've spoken about earlier around the time benefit, that is definitely linked to that. That's what leads to the lead time being over a week. But we reduced that to no couriering whatsoever. So there's definitely a sustainability angle there, I think, that can be looked at. In terms of the role that banks can play in supporting global legal reform, I think the ICC UK and the Law Commission have done a fantastic job keeping the banks and other stakeholders engaged throughout the legislative process. And I hope we lent our support by providing practical expertise and concluding these initial digital transactions to try and demonstrate the theoretical benefits of digitization. I think the key thing really that we can do as banks to promote digitization is to speak with our clients about what's being done and demystify trade digitization for them, to ensure that we're inspiring trust and confidence in the new digital processes that are out there. I think not all trade documents provide rights to the possessors, such as bills of exchange, prom notes, bills of lading. That's what we're talking about when we're talking about this act. And there are plenty of documents that are used in trade that are capable of being digitized before this act was put into place, but due to custom and internal policy of the different parties involved, have remained largely in paper form. So a good example of that would be the demand guarantee. While guarantees have been issued by SWIFT for many years and Telex before that, a substantial number of guarantees are still issued on paper. So again, we've worked with our clients and worked with 5 key volume beneficiaries to move to paperless issuances for guarantees, and that's an option to all clients now as an alternative to paper. So I think following in that track and basically just working with our clients to ensure that they're comfortable around the new digital processes will be key. So legislative form is key, but I think it's that trade ecosystem is really governed by trust between the parties, and that's what is going to be key to kind of growing the digital journey. And I suppose another key area is the logistics side, and we can help and support there. We're not the main player probably in digitizing bills of lading. That will be the carriers and the other logistics companies. But the Fit Alliance has set some really ambitious targets to digitize bills of lading, which they're around the 1-2% mark at the moment, but there's targets to digitize them all by 2030, and we can really play a role there in ensuring that we're able to accept and transfer on electronic bills of lading as and when we receive them. There's been some great work done by the C4 DTI and the ICC that we've been involved in with an EDO, being able to prove that we are able to interoperate between an EDO and another platform on the EBL side. So more on that will be coming out in the coming months. I think ultimately collaboration across the industry as a whole is vital in order to push forward digitization. I think it's important to maintain a sense of perspective and focus on the intermediate tangible gains rather than trying to move directly to a dematerialized data point driven trade ecosystem. It's been a long journey to this point, and there's definitely still a long way to go, but I believe that in the last 2 years since the Law Commission kicked off this consultation process, great strides have been made. And just to touch on some of the points that Carl made as well, I think from a UK perspective, we feel that trade digitization is a key enabler towards the UK government objective of growing exports up to 1 trillion and removing the barriers and inefficiencies to encourage more and more UK businesses to export.
Thank you for that, John, and thank you all so much. It's a really exciting time for global trade. And I suppose to reiterate, John, what you were saying about the essence of trust, and I completely sort of am in line with that. And I think hopefully if we can sort of collaborate across the industry and almost like seize this moment and moving forwards, it can really enact wide scale change. And you all sort of a testament to that today, and it's sort of see what happens moving forwards now for the next months and years ahead. So thank you all very much for that. And Brian, over to you now for the fireside chat. Thank you.
Good afternoon. My name is Brian Canup, Assistant Editor at Trade Finance Global. Thank you, Tash. That was some great insight on the coordinated public and private approach to ensuring the adoption of electronic trade documents from a financial institution's perspective.
So now that we have a clear understanding of what the Act is and how financial institutions are ensuring the Act gets promoted at all levels, we're going to take a dive into how it aligns with international trade rules and standards. In this third session, we're going to take a slightly different approach, more of a fireside chat looking at how the ETDA complies with international trade rules. The International Chamber of Commerce, or ICC, produces universally accepted rules and guidelines to help businesses access the financing needed to advance the necessary funds to import or export valuable goods on their own. As part of its effort to promote a paperless business world, the ICC Global Banking Commission has continuously promoted the use of digital rules. Today, I'm joined by David Maynell, Digital Rules Advisor, ICC United Kingdom Center for Digital Trade and Innovation, or ICC C4DTI. Dave is going to be talking about how all 7 clauses in the ETDA synergizes with the ICC digital trade rules, notably the Uniform Rules for Digital Trade Transactions, URDTT, and the ICC's e-rules. Dave, thank you for joining. Over to you, and can you please give a quick introduction of who you are?
Yeah, thank you very much, Brian. Previously, or about 10 years ago, I used to work for Deutsche Bank in a number of locations around the world. These days, I'm now the Senior Technical Advisor to the ICC Banking Commission. I work with C4DTI, as you state, and I'm also work as a trade consultant and trainer.
Some pretty impressive industry knowledge coming from you. So let's jump straight into it. Can you give a brief overview of the ETDA's alignment with international trade rules and standards?
Yeah, certainly. And as you've already mentioned, the ICC do produce rules and guidelines to help trade financing. But in the past, they've concentrated primarily on the traditional trade finance products, such as documentary credits, collections, demand guarantees, etc. But over the last few years, they've now been focusing primarily on digital trade finance. So, for example, we had the Uniform Rules for Digital Trade Transactions, known shorthand as URDTT, which came into effect from October 2021, and they are fully aligned with and enjoy the benefits of the ETDA. The ETDA will also benefit other ICC rules, such as the EUCP, which supplements the Uniform Customs and Practice for Documentary Credits, UCP 600, which is probably the most widely used set of trade rules from an international perspective. Now, for clarification, there is nothing in the ETDA that clashes either with the EUCP or the URDTT. In fact, the recent realignment of the EUCP with the UNCITRAL Model Law on Electronic Transferable Records, MELITA, now ensures similar alignment with the ETDA. And we can look at some examples to support this. For example, Clause 1 of the ETDA provides a definition of a paper trade document, referring to a document issued on paper. The EUCP definitions state that a paper document means a document in a paper form, whilst the URDTT only exists in a digital environment. So there are no concerns in alignment here. The ETDA Clause 2 defines an electronic trade document as one that contains the same information as would be required in a paper equivalent. And this ensures establishment of a link between the document in its electronic form and its paper counterpart. So similarly, under the URDTT, a digital trade transaction is a representation of the underlying transaction and is the process by which the terms of the commercial contract between the seller and the buyer are recorded and progressed. Within the EUCP, an electronic transferable record is defined as an electronic record that contains the information that would be required in the equivalent paper document, for instance, a bill of lading or an insurance document. A further aspect of Clause 2 of the ETDA is that a reliable system be used to give the document the required functions for it to qualify as an electronic trade document. And the term reliable means that the electronic system meets certain standards. And this clause provides a list of the non-exhaustive factors that a court may consider when determining if a system is reliable. Now, with respect to the URDTT and the EUCP, a data processing system is defined as a computerized or an electronic or any other automated means used to process and manipulate data, initiate an action, or respond to data messages in whole or in part. So once again, for alignment. Now, one of the most important aspects of the ETDA is enshrined within Clause 3, wherein it's stated that a person may possess, endorse, and part with possession of an electronic trade document. The URDTT provide for submission of electronic records rather than presentation of paper documents. Importantly, the rules contemplate exclusive control of an electronic record as meeting a legal requirement for possession of a document. So to finalise on this question, alignment definitely in place.
Great. It's impressive they can kind of bring all of these different areas together, considering how complicated some of the intricacies can be. So, and now I guess we did just talk about alignment here, but can you touch on the potential conflicts of the ETDA and other existing trade regulations?
Yeah, it's an interesting question. The fact is that up till now, none have been recognised. However, there are some differences. For instance, if we look at Clause 1 of the ETDA, this provides common examples of applicable documents which are considered as key documents in widespread use. And the documents they've listed are those most commonly used in trade to which possession is relevant. Now, neither the URDTT nor the EUCP specifically restrict the type of document that is covered. However, as with the ETDA, it would be normal practice for such documents to be those generally used in trade. Another example is Clause 4 of the ETDA, which contemplates conversion of a paper trade document into an electronic trade document, or an electronic trade document into a paper trade document, provided that certain conditions are met. And the ETDA goes on to state that where a document is converted, the document in its old form would cease to have effect. However, the rights and liabilities relating to the document would continue to have effect to the document in its new form. And this will ensure that there is no duplication of the performance obligation because the old form of the document ceases to have effect. Now, if we look at the URDTT, it's expected in the event that part of a transaction converts to paper, then the involved parties would reach a separate agreement on how to proceed, particularly if such action were inadvertent. However, this process would actually be outside the scope of the URDTT. And if we look at the EUCP, this makes no mention of the issue at all. And at this stage, it's a matter of market practice and individual operational procedures. Clause 3 of the ETDA states that anything done in relation to an electronic trade document has the same effect in relation to the document as it would have in relation to an equivalent paper trade document. Now, under the URDTT, whenever an amendment is made to a digital trade transaction, it requires the agreement of the buyer and seller, any financial services provider that has issued a payment undertaking, and any other beneficiary. And with respect to the treatment of documentary credit amendments in the digital world, evolving practice is almost certainly going to decide the most valid approach. At this stage, the handling of amendments is defaulted to UCP 600. So to summarise, the position in UCP 600 is that amendments must be accepted or rejected.
Great. Well, I appreciate that summary of the conflicts for the ETDA and existing regulations. And now is the harder part is looking at what steps are or what steps should be taken by the UK and international bodies to ensure that the ETDA has compatibility with the global trade practices. Could you help us clarify some of this?
Yeah, it is a very important point. And we already know that electronic transferable records are a fundamental component of a paperless trade environment. And this is going to make a critical contribution to trade facilitation. If we go back a couple of years to 2021, the G7 declared that they would work together to develop mutually compatible technology and digital reforms. And one of the key interventions that they identified was greater adoption of electronic transferable records. And if we look just a couple of weeks ago at the G20 meeting, the G20 committed to a set of high-level principles for the digitalisation of trade documents. So it's great to see that the G20 have also affirmed that they will make efforts to encourage implementation and encourage other countries to consider these principles. Now also, and as I already noted earlier, the United Nations has introduced the Intertrial Model Law on electronic transferable records. And it's worth noting that as a model law, Melita is a suggested pattern for lawmakers in national governments to consider adopting as part of their domestic legislation. Now, with the ETDA coming into effect in the UK in a couple of weeks' time, we've reached a synchronous connection between technology, practice, law, and rules. And most importantly, the ETDA aligns with the Melita, thereby ensuring a functional equivalence. Additionally, and this was evidenced in a recent paper released by the Centre for Digital Trade and Innovation, the C4DCI that we mentioned earlier, there is already sufficient alignment between the ETDA and global trade rules and practices. Which is low. I mean, there is a big role for trade bodies. They can provide support, they can link parties, facilitate interaction, advocate for change, lobby regulators, and critically liaise with relevant government departments in order to initiate legislation and safeguard a common agenda. And that's what we saw in the UK. One excellent example of this is the C4DCI, which I just mentioned. I should also mention that the ICC UK have in place a digital trade roadmap, which has been around for some time. And that's intended to help provide a framework for digitalisation, setting out the actions required to digitalise trade. It also sets out how the trade system operates today, how it will operate in the future, and what needs to be implemented now in order to achieve this vision. We are still at the early stages, but many of the fundamental building blocks are now in place, bringing the world of digital trade finance nearer to achieving interoperability. The challenge, of course, and we've known this for a long time, is to digitally replace what's estimated by the ICC to be 4 billion paper documents which circulate in the trade system.
Well, I think once we fully, adopt these digital rules, I think a lot of trees will be saying thank you to some of these efforts here. Can you give a legal perspective on some of these challenges and solutions in harmonizing the ETDA with the international trade rules?
Definitely, yes. And if we look at Clause 6 of the ETDA, this makes consequential amendments by setting out amendments to the existing Bills of Exchange Act of 1882 and providing for repeal of certain provisions of the Carriage of Goods by Sea Act of 1992. Now, this is not directly relevant to the URDTT, although in respect of bills of exchange as part of a digital trade transaction, this will be decided by market practice. Bottom line, any payment obligation under the URDTT that meets the provisions of the Bills of Exchange Act can be treated as a bill of exchange. Another issue surrounds the term in writing. Documents may have a requirement that they must be in writing. Unlike the Melita, there is no explicit provision in the ETDA that allows for electronic documents to satisfy in writing requirements. And this is because the law of England and Wales defines writing in broad terms. And it's believed that the current position in UK law is already clear. A trade document in electronic form can satisfy a requirement to be in writing. And if we look at the URDTT, this highlights that unless applicable law requires otherwise, a requirement that information should be in writing is satisfied when an electronic record containing such information is accessible to an addressee and is not affected by any data corruption. And this reflects one of the objectives of the Melita, which is to enable or facilitate the use of e-commerce and provide equal treatment to users of paper-based documentation and to users of computer-based information. Another issue, trade documents may be required to be signed in order to be validly issued. The Melita makes specific provision to allow for the signing of electronic documents. This is not mentioned in the ETDA. And the reason is that UK law is already sufficiently flexible to accommodate electronic signatures. With respect to the URDTT, although at this stage there are no recommended minimum standards surrounding electronic signatures, the ICC publication implementing URDTT does provide a guide. Originals and copies are another interesting issue. The ETDA does not specifically address the concept of original electronic trade documents. The key issue is that the document in question can be distinguished from any copies so that the obligation recorded therein is singularized. And the ETDA achieves this insofar as it requires a document in electronic form to be identified as a document so that it can be distinguished from any copies before it can qualify as an electronic trade document. There are therefore no concerns with copies in the context of electronic trade documents, just as there are no concerns with copies in the paper context. Under both the URDTT and the EUCP, any requirement for submission of one or more original or copies of an electronic record is satisfied by the submission of one electronic record. So once again, this ensures alignment. Overall, 3 words do it for me: data, not paper.
Great, thank you for that, Dave. Can you talk about the role of the ICC and other trade bodies in guiding the ETDA's integration with global trade standards?
Yeah, absolutely. And we both mentioned at the outset that the ICC produces university accepted rules and guidelines to help business access trade financing. And ICC rules are increasingly positioning to allow alignment of corporates, banks, service providers, and fintechs to address changing needs of trade finance in a digitized world. Furthermore, a series of digital commercialization briefing papers is underway, and the first has already been made available and is accessible on the ICC website, which covers the risk of email presentations and file attachments under documentary credit subject to UCP. The Digital Standards Initiative, the DSI, and the World Trade Organization have jointly produced a standards toolkit, which looks at cross-border paperless trade. And this provides an overview of existing standards to help drive adoption, identify potential gaps, and promote interoperability. The stated objective is to equip every supply chain participant, both public and private, with some of the most notable and widely used standards to help push trade digitalization to the next level. As a separate initiative, the DSI is also compiling a digital standards and data elements analysis for 7 key trade documents, and there will be more to follow. And these cover all major electronic versions of these documents. The significance of this project is that data elements, when shared, could form a single source of truth to enable transactions needed along the supply chain, as well as trade finance processes. Each and every one of these initiatives, plus many others originating from the likes of BAFT, ITFA, the Digital Container Shipping Association, UNCITRAL, and others, also support the aims of the ETDA in fundamentally simplifying trade processes.
Great, thank you for that summary of how the ICC will be helping integrate with global trade. And after the break, we'll be joined once again by Tash, who will be moderating our 4th session, looking at what's happening from a shipping and logistics perspective. And Dave, thank you very much for joining us and helping us break down the ETDA.
Well, glad I could be of assistance.
Thanks, Brian, and welcome to session 4, where we'll discuss what's happening from a shipping and logistics perspective. Shipping and logistics are the backbone of international trade industry. Over 80% of traded goods are transported by sea. So, whether you realize it or not, the ETDA will be impacting almost every aspect of your daily life. And it can be a long journey. It takes a ship roughly 2 weeks from London to New York, or about 3 to 5 then to Delhi. And on top of that, there are often delays due to the slow process of processing paper documents. And that is why the ETDA is so vital for the shipping industry. We don't need any more delays in an already lengthy process, and that's when things are going well. So in this session, we're going to break down how the shipping and logistics industry can make a smooth transition to digital systems, what role partnerships will play, and what challenges the industry will face during this move. And on that note, I'm very happy to introduce our panelists today. We have Grant Hunter from BIMCO, Dominique Willems from DCSA, Boaz Lessem from Wave BL, and Kevin Shakespeare from the Institute of Export and International Trade. Dominique, I'm going to start with you, please. So 96% of trade documents are still paper-based. Can you please talk us through the difference between a paper bill of lading to an e-bill of lading?
Well, actually, the difference isn't that big, apart from some obvious advantages that are there with going digital. An electronic bill of lading contains the same data as a paper bill of lading. It contains, it has the same conditions, and there are the same contracting parties. So in that sense, there is nothing different. The difference, however, is in the acceptance of it. This can be an acceptance in a legal court when there is some kind of commercial dispute or when dealing with certain customs formalities. There we see that across the globe, actually, there are issues with the acceptance of the electronic bill of lading. This can be that an electronic bill of lading is not accepted at all. It can be that it is accepted, but under quite elaborate or restrictive conditions, more than under the paper situation. Or, and this is what we see in most countries, that there is no clear rule about the acceptance of an electronic bill of lading. And that leads to legal uncertainty, workarounds, etc., to make sure that that certainty can be there. It's quite strange that those differences exist, because in other areas like banking or aviation for about 2 decades, electronic has been the norm. But like with the Electronic Trade Documents Act in the UK, we really see these things moving, and the UK is especially important for the members of DCSA because a large majority of the bills of lading, at least for our members, the large container shipping lines, are done under the law of England and Wales. So this really makes sure that this legal certainty, this equivalence that is needed to go electronic is there.
Thank you, Dominique. And I'm going to stick with you for this one, and I'll pass over to Grant, so you'll both get a chance to speak. Dominique, I'm going to stick with you for this first one, and then Grant, I'll give you a chance to have an input. So having launched the declaration of the Electronic Bill of Lading as the FIT Alliance last week, please can you share some more details?
Yeah, sure. The FIT Alliance is an alliance that consists of, well, BIMCO, who is here today, mostly in this case when it comes to the Electronic Bill of Lading focusing on bulk shipping. It includes FIATA, the Global Freight Forwarders Association, SWIFT for banking, and the ICC, the International Chamber of Commerce, and then obviously DCSA representing the large container shipping lines. We set this up because we saw that something like an EBL, as you pointed out before, really has a global impact, and you can't get something like that accepted and working by doing something in a siloed manner. So we really realized that it is important that different industries come together to make this happen, and this is what the FIT Alliance is. And the declaration then is to make sure that also the other stakeholders and the direct companies involved also commit to going 100% electronic. Our members earlier this year at CEO level said, from our part, we want to achieve 100% electronic by 2030, which we are already very happy about. That's a big commitment. Seems far away, but it's still quite ambitious. And now together with the FIT Alliance, we're doing the same and asking everybody else in the world to commit to the same.
Thank you for that. Grant, is there anything else you'd like to add?
Yeah, just building on what Dominique has been saying there, this is a universal declaration, and it in itself is building on some campaigns that we've already been running between DSSA and BIMCO. DCSA, its own members, have focused on reaching 100% adoption by 2030. They work from the perspective that they are very large carriers, and the ones can decide whether they're going to go down the electronic bill of lading route. In the bulk shipping world, it's slightly different. It's the shippers generally who decide what bill of lading or what type of bill of lading is used. So we've done a lot of work with some of the world's largest mining companies to get them on board to pledge that within the next 2 years, they will shift 25% of one particular trade commodity, iron ore or whatever, on electronic bills of lading. So the steps are smaller, but it's quite significant because the values of bills of lading used in the bulk shipping industry are far, far higher than those in the container industry, even though the numbers is very different. So we're looking at different value propositions between the container industry and the bulk industry. But what this declaration now does is combine this effort in a universal declaration to say all of the companies and all of the stakeholders that are going to sign up to this are saying we are now ready and committed to this digital transformation, focusing on getting this universal bill of lading, a common standard right across all sectors.
Thank you, Grant. And then Boaz, what would you say are the advantages of the EBL?
Hi, everyone. I would say the advantages of the EBL should be looked in a very in a wider scope. So when we see the electronic EBL revolution, we should look at it as part of the entire tokenization revolution, which is running around the world right now of assets, of becoming digital. When we tokenize an electronic bill of lading, we actually tokenize a paper token, which is the bill of lading itself, into an electronic format. We have the short-term goals, which everyone understands when he wants to enroll to a service like this, slashing down time and reducing partial solutions, TEDx release, and LOI, stuff like that. These are all risks which today are taken by companies around the world, which could be removed, and time which could be saved, and more efficiency. When we use an EBL platform, we have an acceptable registry, which is not, it cannot be challenged. It won't be challenged because it's acceptable by everyone. That creates a lot of certainty. And together with a structured binary legal regime, this leads the ground to automation. And in years from now, 2, 3, 5, 10 years from now, we can expect to see this as a very big revolution, which will lead to actual real-time data, to streamlining of business workflows, systemic risk reduction, and the most important thing, access to new funding, because this is just, I don't know, 90% of these assets around the world don't even reach a financier because there's no time and they're unacceptable and they're in the paper format and nobody knows if they're forged. And now this could be settled in a second or 2 seconds. So that's what we expect the end of this revolution would look like in a decade.
Thank you, Boaz. So we've talked about sort of the huge positives, but there's always a sort of flip side to the coin. So Grant, what would you say are the biggest challenges for the EBL, and how is BIMCO addressing these? And I suppose more so, like, what actually changes once the Act comes into force?
Yeah, Natasha, of course, there are always challenges, and I think we can distill them down into one word: people. The obstacles are often the people behind it. The technology is there, it works, it's worked for many, many years. We are getting increasing legal certainty around this, and certainly the new Electronic Trade Document Act is a tremendous development to really help things. But quite often what we discover in talking to people, it's the mindset. I've yet to talk to anyone who doesn't think the electronic bills of lading is a good idea, but it turns out their customer doesn't like it, or the bank doesn't like it. And you do the rounds, everybody finds somebody else that's a stumbling block in the system. And so for us, I think it's a real role for BIMCOs, of any neutral organization, to get out and share information and knowledge and better understanding about how these systems work and the advantages that they can bring, the speed and the efficiency and the security that using these systems can bring. And that people nowadays aren't going to be first movers. We've got lots of examples of big companies already using electronic bills of lading in the bulk shipping sector very successfully, and that's growing year in, year out. So that fear of being the first mover, we don't believe is there. But we're only going to convince and persuade people if we get out there and share the good news stories. So that's something we're very keen to do. And certainly when it comes to the Electronic Trade Documents Act, yes, you're quite right. In the bulk shipping industry, the number of bills of lading subject to English law is between 60 and 80%, something like that. So it's a very significant development, and that's something we want to focus on as well. How will this work in practice? How will it make it even easier to use electronic bills of lading in the future? And I think that's going to be a really key enabler. So there are still challenges. I think a lot of them are educational. A lot of sharing information has to be done, but it's nothing I don't think we can achieve, and we're working very hard to achieve that.
Wow, that was very great optimism there, Zach. Kevin, are there any foreseeable changes, do you think, at sort of a customs, border control, single trade sort of window level? And what should governments do? What are organizations such as the IOE and IT actually doing about it?
Yeah, it's a great question, and I guess it's a really exciting time, and the pace of change globally in so many ways, and to some extent started by the WTO Trade Facilitation Agreement, TFA. So a lot of changes there, and enhancements at customs and border processes, and how the interaction with industry. In the EU, we've just had recent announcements on EU customs reform and terms such as trust and check, and more facilitation. So electronic trade documents fits into that. In the UK last week, we had the announcement of the Border Target Operating Model, the BTOM, which is clearly looking at a lot of facilitation. So, for example, for low risk phytosanitary goods, no requirement free phyto from the European Union and some rest of world countries, similarly on import pre-notification. So it's all linking together, and I think it's important to see the Electronic Trade Documents Bill as part of this great journey towards trade facilitation, to speed up trade, to reduce the costs and time to trade. At the Institute, we've clearly been involved in several of the digital trade corridors, the ecosystem of trust, as it's referred to in the UK, for movements from Kenya, for movements from the EU, working with UNCFACT at the moment around projects on critical raw materials, digital identities, and so on. But I think it's important, as a final point, is that whatever is being developed in the industry, it has to be interoperable. So systems can very much talk to each other, and we can see it as a wider user journey, whether it's textiles, critical minerals, and so on, is that e-bills of lading have a great opportunity to work with the other digital initiatives taking place. Thank you.
Thank you, Kevin. And Dominic, over to you. What are the key changes that you think the industry sort of needs to overcome?
Well, the biggest change is, even though it seems like it's called an electronic bill of lading or it's digital trade, the biggest change isn't so much in changing systems. Basically, even if eventually a document is printed out on paper, the processes around it are generally already digital and electronic. The big change is, as Grant also pointed out, in people and ways of working. If you just put a digital, a paper-based process into a digital environment, you won't get to any kind of efficiency improvements. You just get the same process, but now it's digital. So it really requires adapting ways of working of the industry, but also the customers, also ports, also banks, also all the other stakeholders involved across the global supply chain will need to change their processes, change their way of thinking sometimes, leave out what has happened in the centuries that were before, and really look ahead at how can we do these things differently.
Thank you. So I suppose on a practical note, and I'm going to go back to you, Kevin, now, if you're a UK exporter, how could you use the ETDB to sort of streamline your trade operations?
Yeah, it's a really good question there, and I think an exporter, a UK exporter, or any exporter, needs to think about the role of the bill of lading, for example, in the actual trade transaction, and the unique aspects of the bill of lading. So we would encourage all exporters clearly to work closely with their logistics service providers to maximize use of electronic documents, and certainly the corporates, the SMEs, will be key to adoption of electronic documentation. And clearly the concept of whether it's 60 to 80% of bills of lading under English law give some great opportunities here as well. So yeah, at the end of the day, why wait for the paper document when you have an electronic version available? We'd also, though, encourage exporters to consider their payment terms and the role of the bill of lading in the payment terms. And maybe not enough exporters consider this there. So whether you're trading on open account terms, cash in advance, letter of credit, documentary bank collections, what is the role of the bill of lading in that? Because clearly the bill of lading can be exchanged at different times in relation to those payment terms. Also, how does it correspond to INCO terms as well, the international commercial terms? So, but really for the exporter, it's consider the role of the bill of lading. How can they maximize it to speed up trade, but also gain more trade with overseas buyers? Because at the end of the day, a successful export transaction is the best export transaction leading to repeat business.
Thank you for that. So we've done it from the exporter perspective. So now on to the trade tech side. So Boaz, how is RateBL and other trade tech providers, how do they facilitate a smooth transition to digital trade?
So first of all, how do we measure our activity? We measure it by issuances. We want more issuances of more EBLs on our platforms. And when we map the challenges that we always had and now still have, So we see that in reality, it still takes time to onboard an EBL platform in the corporate level, and then to onboard your fellow partners who need to receive these EBLs, the shippers, the consignees, the BCOs around the world. So even if a carrier or an issuer wants to go digital, he needs to consider if that platform has the capability to transform his network. And that's what we're working on. The name of the game today, which Dominic and DCSA are well familiar with, is interoperability. Everybody talks about it, but interoperability is an aim to reach more accessibility. That's the way we see it internally. We want an EBL to be accessible everywhere, anywhere, even on an email address, even on a party or a user which is not pre-onboarded to our platform. It could be on another platform, but it could be a party which is just not yet digital, not yet online, just like on DocuSign, just like on any other service. We have to maintain and preserve the benefits across the way while doing that, but that's our main goal. The second goal we're working on is facilitation of structured presentation of documents, because we want to lead to automation. So we would like to use standards that are created by DCSA, for example, for an EBL or for other documents, and to allow machine reading of these documents on the decoding side, the recipient of that document later on. So there won't be any human involvement need to screen the document and go through it. And the second part of that is the actual presentation, because if, for example, the bank says, I want to receive 1, 2, and 3 different documents, and otherwise I just don't want to receive a presentation, that's how an application should look like. That's what we need to develop. These structured presentations in structured formats, which will lead to settlement of documents within seconds. That will increase the value proposition of EBLs and will make it more easier for Grant and myself to persuade these companies, I hope, to onboard to the EBL platforms.
Very nice, thank you.
Hopefully.
Hopefully, always. Grant, do you see any other potential challenges in logistics due to the enactment of the bill?
No. Okay, I'll answer that. That's my optimistic view, but of course there will be challenges. Of course, there will be challenges. I think, you know, if you've seen the Electronic Trade Documents Act, it's quite a slim bit of legislation. There's not a lot in it at all, and clearly the idea is that the industry has to put a lot of input and a lot of work to make this happen. I think one of the things that it's not a concern, but something we do have to deal with is that the present system of platforms, they're all closed private law systems where, as Boaz was saying, you kind of sign up to a set of rules and you abide by those. This is always onboarding time to read all the terms and conditions. And the basis of that's from the carrier's point of view is they want to have certainty that their insurance, their P&I insurance, will not be prejudiced by using one of these systems, because essentially you're agreeing by private law that this electronic bill of lading has the same legal status as paper bill of lading. In this new world with the Electronic Trade Documents Act, we're saying it's legally fine. This electronic bill of lading is a legal standard. But what that creates is a situation, how in the future do we say to the industry, this is an approved system, this is an acceptable system to use? What are the benchmark, what are the standards that the platforms will need to adhere to under the Electronic Trade Documents Act and other similar legislation in other countries as well? So we have a description of a reliable system under the UK law. What does that actually mean, and how do we define it? And I think from our perspective that, you know, maybe it's for the industry to establish some sort of voluntary standard to say this is what platforms need to meet in terms of, you know, access and security and insurance cover or whatever. And that would be the benchmark for companies thinking of moving to the electronic bill of lading space to say, okay, well, that platform now works fine. Because I think what we have at the moment, it works very well. IG approval is kind of globally recognized, but it doesn't necessarily mean anything to a shipper or a bank or another stakeholder. It's meaningful to those who have P&I cover. We need something else in this new world where we have the Electronic Trade Documents Act. So I know this discussion is ongoing about that at the moment, but it is something we do need to address, and quite quickly.
Thank you for that, and thank you all of you. And I know interoperability is often a keyword in the industry, but it's never felt more apt than at this sort of current time and for the success of the electronic bill of lading. And I think sort of the journey that you've all shared in terms of hopefully the optimistic journey, but yes, there's ways in which we can do that. And Grant, it really resonated with me. You talked about with people and education being the biggest challenge. And for me, I was a former teacher in my past life. So the idea of actually, yes, having like enacting and making sure that everyone is on the same page and that everyone actually we are working together, because you're right. And I think Dominique said this as well. It's very easy to have almost all the setup is now there, but to change people's processes and to change people's minds and ways of thinking is often much, much harder. So yes, I think we've maybe got a little bit of a climb to go, but I think the fact that we're all and so many different stakeholders are working together is really, really momentous, and hopefully it's a really exciting time. Thank you all so much for sharing all your insights. And George, over to you for the last session, please. Thank you.
Hello, my name is George Billen, reporter at Trade Finance Global. Thank you, Tash, and the great panel for giving an overview on how the ETDB will impact port operators, freight forwarders, and other logistics stakeholders. Section 2.2 and 2.5 of the Electronic Trade Documents Act talks about reliable systems. These, as I have paraphrased from the Act, should be able to identify documents so that they can be distinguished from other copies, protect against unauthorized alteration, and be secure with the ability of each document to transfer control and ownership. But how can we assess these in reality? To discuss reliable systems in detail, I'm delighted to be joined by Nick Davies, Director of ICC's C4DTI, Patrick Zecker, CEO at Enigio, Sean Edwards, Chairman at ITFA, and Miriam Goldby, Professor of Shipping, Insurance and Commercial Law at the Queen Mary University of London. In this final section, we'll not only be defining reliable systems, but also discussing the global frameworks for establishing reliable systems in digital trade, which includes possible public registers and assessment mechanisms. So to start with, Sean, what do reliable systems mean in relation to electronic trade documents?
Okay, well, I mean, let's first of all look at the background a little bit before I answer that question. So the requirement for a reliable system is something that comes from MLETR, from Model Law for electronic transferable records. And if you look at what that's trying to do globally, is to achieve high standards in relation to trade documents. So MLETR and the ETDA deal with the legal issue of possession or functional equivalency. But at the same time, we need to make sure that at least the law needs to have a good go at trying to make sure that what we put in place to replace paper is reliable. Now, it's chosen to do that through some guidance on what a reliable system is. So as you said, the things that it needs to achieve are essentially uniqueness, the ability to control and divest yourself. So what the Law Commission calls rivalrousness. That's to say the ability to hold it separate from the claims of anybody else to hold a document. And that's done through control. And that's also something that is touched on, but is not explained in the Act. And the reason for that is that the authorities are really looking to the markets and to the service providers such as Enigio, as we have here, to provide those systems. Now, the Act, Section 2, provides a list of criteria which are guidance only. So it's very important to note that you don't have to tick each box. You don't have to tick any box, in fact, although in practice, the more boxes you can tick, the more likely you are to end up with a reliable system. We'll probably talk a little bit later about, and I, Nick and ITFA and others have been doing a lot of work on, as you talked about, public registers as to how you can actually prove that. But the idea is to have a system that is very secure, that is robust. A lot of this, which is common to all the different kinds of trade instruments, is around cybersecurity. So things like security of the hardware. I'm looking here to the side because I'm just reading from the Act. Measures to prevent unauthorized access, security of the hardware, measures to secure integrity. So these are all things that are common really to all instruments. What's interesting when we look at the bigger universe of trade instruments, so bills of lading on the one hand and the financial instruments, so transport documents versus financial instruments, is the requirements for those might differ. What you need to prove in relation to having a valid bill of lading might be different from a valid bill of exchange, and that will depend very much on the type of instrument that you are trying to produce. The last point I'll make before I hand over is that it's technology neutral. There's a number of ways of achieving this. It's not all about blockchain.
Thank you very much, Sean. So you briefly touched on it, but Nick, so what will be C4DTI's role in ensuring reliable systems?
Yes, so thanks again for the invitation to join today. So as Sean has said, the Act is actually very high level, and it is providing guidance only. None of it is mandatory, and the Section 2.5 that is referred to by Sean is only guidance, and it suggests that these are factors that should be taken into account in judging of whether a system is reliable or not. And I don't think there's anything in the Act that says that that judges will be setting a higher bar than is already there for what is reliability, subject to them achieving the legal functionality that Sean spoke about, which is that establishment of good title and its rivalrous transfer to one other person, whereupon the interest of the transferor is obliterated. So there's a fair degree of sort of detail underneath the provisions of the Act, really to be sorted out. And both the Act and the Law Commission guidance on this is quite clear that there's no sort of creation of a very heavy and bureaucratic process here. The phrase that the Act uses is voluntary scheme or industry standard. And that's really what we in the ICC and the United Kingdom and the Centre for Digital Trade and Innovation in particular are trying to work towards. We are trying to pull together what is already out there and build that into that voluntary scheme. And I think an analogy I like to use, which is actually coined by Chris Southworth, is of an MOT test. It's a checklist of things that it will be useful for a potential user of these schemes to know that systems, I should say, to know that their system can do and the standards to which that system does conform. And we've already got plenty of standards out there that we can pray in aid here. The Digital Standards Initiative from the International Chambers of Commerce Digital Standards Initiative is a case in point. The work that ITFA has done on its negotiable instruments is another. And of course, there are others in DCSA, BIMCO, and other organizations. We can put those together and develop that, what we call model, for a reliable system. And what we aim to do is to ensure that once a system is assessed as being conformant with that model, we will put that on a publicly available register, so that the potential user of such a system can be assured that within a reasonable degree of certainty, the system that they might choose is actually reliable as far as our model is concerned. But just to iterate, I think there are a lot of systems out there that are already doing this function that are probably reliable under the terms of the Act, if you like, de facto reliable, because people are already paying them to handle electronic documents. And it's really just a matter of matching their capabilities with the requirements of the Act, filling in any gaps or assuring potential users that those are covered, and then getting going. What the last thing we want is for there to be a big delay between the Act coming into force in 3 weeks' time and actually people being able to take advantage of its provisions.
So Miriam, as I mentioned earlier, the bill refers to reliable systems. What are reliable systems?
The ETDA does not define a reliable system. So the question whether a particular system is reliable is a question of fact, and it falls to be determined objectively on a case-by-case basis. The Act gives a list of indicators, and this list seeks simultaneously to provide sufficient guidance to anyone interested in establishing whether a system is reliable. And this might be a system designer / provider or a dispute adjudicator, while at the same time avoiding over-prescriptiveness and safeguarding technology neutrality. Now, it's important to safeguard technology neutrality in order to avoid stymieing innovation or raising barriers to future developments in the technology being used to provide these systems.
Yes, thank you very much, Miriam. And then I guess moving on from that, Miriam again, how should such systems be regulated?
The Act does not envisage formal regulatory mechanisms, and it is up to the parties to ascertain that the system they are using is reliable. The indicators of reliability are not new and should be familiar to information technology service providers. In the assessment of system reliability, we can therefore build on familiar notions and processes, including, for example, extensive testing of a system to establish that it is able to achieve the required outcomes. And this testing can take place both before it goes live and as its functionality evolves further. Another example would be the organization of regular audits by an independent third party of the system's functioning. Standards are important to the assessment of reliability. While certain standards may still be under development, some established standards can be drawn upon in evaluating the reliability of a system. For example, an established standard that is very likely relevant is the ISO 27001 standard on information security management.
Thank you very much, Miriam. Patrick, over to you now. So how should Enigio ensure its systems are reliable? And how can you work with other vendors to be agnostic and also ensure your systems can be used amongst a suite of others?
Yes, let me start to take the perspective from Miriam. I think in order to secure that we are a reliable system, I agree that the part in relation to security requirements, subsection to number 2, secure software and hardware, etc. These are things which we do already today as technology provider. It's the penetration testing. It's a lot of things which do not change with this, which is already catering for. The interesting part is when we go into secure or are securing that we are reliable are the functional requirements and how we manifest the functional requirements which are put in, which a lot refers to being the paper equivalence in the Act. And I think the way we go about it is that we have 6 levels here to fulfill. There's the singularity, the possessibility, integrity, control, transferability, and disposal. As Sean was saying, you don't need to fulfill all the steps, if you call it steps or a ladder, in order to deliver. You need to fulfill all the ladders in to be compliant to deliver all type of trade documents, and that's our target. But you don't really need to be compliant with all the steps in order to deliver some of the trade documents. You know, for a house bill of lading, it may not need to be transferable or something similar. So there's this differentiation here, and I think that's important to think about in relation to the solution. Do they fulfill all the requirements or certain requirements, but it's sufficiently still? Secondly, when it comes to all the requirement functionalities, manifestation of this requirement, there is much more under each of these labels, which are really important when selecting and assuring a reliable system, which I think the market will develop out of this. So this is a good guideline, but we have to further develop this model. If I take an example, just to be concrete, if you look at singularity and the requirement to distinguish the original from the copy, there is also in the practical life, an operating trade, a need for be able to verify the copy. Not only separate or distinguish the original from the copy, but also to be able to verify the copy. Because we are using a lot of copies in trade, and we need to be certain and need to be reliable that this copy is the copy we're discussing. A second of this is in relation to signature, because the law is saying that everything needs to be on the document. The promise or the undertaking need to be documented on the electronic document. And such an undertaking or promise needs to, in most of the cases, not all the cases, to be signed. And then the signature and how the signature is applied, it's also critical, especially if you're doing cross-border transaction where regulation around electronic signatures differ. If you take Germany compare with UK, if you have a European transaction. So I think from our perspective, it's looking at it from how do we comply with all requirements for all trade documents, and how do we comply with transaction not only within UK but also cross-border, which has been a task which we set up to deliver on. Further, if I could continue to raise a couple of other things which I think it's important here is the discussion in relation to the change, or not the discussion, the text in relation to the change of media of trade documents in the Act. That also comes with a couple of requirements under, if you go detailed, because if you're going to do valid and reliable change of media, the document need to be updatable. Otherwise, you can never achieve a reliable and change of media. So even though the law doesn't say exactly, it says that you have to go from digital to paper and from paper to digital. How you are doing that is not specifically set out, as Miriam also said, but there is where you find the differences between being compliant or not compliant, going back to that the actual document or instrument need to be valid, binding, and enforceable. And yes.
Thank you, Patrick. I think there were some really important points that you raised. Sean, back over to you now. So what's the importance of system reliability in the digital trade document ecosystem?
Okay, well, the first thing is, as a legal matter, if you don't have a reliable system, you don't have a valid document. So that's a very basic point. It's not just about, do you have a great system that can, that can move the document fast? How much better is it than paper? You actually need that. It's a precondition to validity. And that freaks people out a little bit, because, oh my God, suddenly we've got over this possession problem that the law has dealt with, and Melita is dealing with globally, and the equivalency problem. But suddenly we have to show that we have a reliable system. And who's going to do this? Well, ultimately the courts will. But I go back to to what Nick has said, that it is very clear that what the authorities in the UK, Law Commission, Parliament, and UNCITRAL are trying to do is to provide a reasonable baseline for something that replaces paper. Now, there's a lot of things that aren't great about paper, and we all know how it slows down trade. But one of the things that is good about paper is it's easy to use, right? easy to use in terms of creation, not necessarily in terms of transmission. So we're trying to create something, or the authorities are trying to create something that will be quite as easy to use as paper, but will have the same sort of integrity. I'm trying to find another word for reliable, but something that is easy to use as paper, with the same degree of assurance once you've created the instrument. And then, of course, as we've discussed, you then need to be able as well to transmit that. It needs to be a rivalrous transmission. You need to show that you've got control, and when there's a chance that you lose control. But that's, so when people come to look at, what are the advantages of me paying Patrick or some of the other providers for their system, they're going to look not just at the benefits of getting rid of the inefficiencies of paper, but they're also going to look and see how quick that system, how much better that system can be at paper. For example, as Patrick has said, the ability to sign documents on the platform, to execute them. So that's why a reliable system, needs to be as good as paper, but it needs also to have these other factors: the speed, the efficiency, the ability to execute, the ability to transmit in a way that is reliable, that has integrity. And commercially, that is the only way in which people are going to start to accept that actually this is a better system than paper.
And can I add to Sean? I think you're completely right. And I think the next level which we experience is when you're assessing, you're assessing the functionality and how do you, as I said, manifest the required functionalities. But then there's a couple of more how, and then it's how does the technology behind this works. And the way we have gone about it is that we use only well-tested technologies. So it's reusing. We don't need to develop the wheel. There is a lot of proven technologies out there, which can be designed and develop to work in the system to be reused. And then of course, on top of that, there need to be a technical assessment. And in our case, we used a third-party independent technical made a technical assessment of the solution, which is simply a code review. How strong is the code? What standards are you using, etc. So there are a lot of things which we already have the structure capitals or the infrastructure, which we can reuse in order to create that confidence in the market, I think.
Yes, I think that's a sorry, Joe, if I'm jumping in, but I think that's a critical point, is that to iterate, I think that a lot of this, I think putting it, the sort of housekeeping is a little bit too trite a word, but you know what I mean, this basic level of systems capability, which must already be present in a lot of cases. For example, if a platform is dealing with a regulated body like a bank, for example, to manage trade finance processes, then that bank cannot interact with that platform without their going through a whole lot of regulatory compliance and due diligence before they would do that. Well, that is something that I think is almost precisely aligned to the, albeit high level provisions or guidance contained in the Act. So I'd be, again, I'd be very surprised if judges were putting a very, a much higher bar on what platforms and systems would have to achieve, but to meet that guidance, the guidance that is provided by the legislators for the judiciary in making a judgment about reliability or otherwise. So I think we're really starting from quite a very healthy point. People have been aware of MLETR type legislation for some time, and I'm sure that people like Patrick and others involved in this area who we've been working with have already been anticipating what it would mean for them to be demonstrably reliable once the Act comes into play. So I'm very hopeful that there won't be a hiatus, that there won't be a loss of momentum once the bill is passed, and that we will have a whole lot of existing providers who will be really pushing to achieve reliability, shall we say, and demonstrate their reliability, and to work with us as we develop our model. And I see this as being a top-down and a bottom-up approach. Top-down, we'll be looking at the standards and relating those to the Act, and then developing the model. But at the same time, we'll be leveling that model development and tempering it by the real world of real life applications. And at some point, those two will come together. And I think we will then be able to provide the sort of model for which providers can measure themselves, and assurance to users that those the systems are themselves are, as far as we can tell, reliable. Bearing in mind that the ultimate test will only ever be, as Miriam has said, in the event that a litigation comes and the point is tested at law. But as I say, I don't see that as being a higher bar than is already out there, or the commercial reliability that a lot of users will already be relying on.
I think, can I comment on that, just to separate what is what? Because if we look at the functionalities to be, let's call it simplified and call it paper equivalent, which is the Act is stating. I think these requirements, if you can fulfill them to 100%, these requirements they will probably remain for quite a while. Then we come to the IT security part, and that is something which, the requirement on the penetration testings, it's just keep increasing as the attacks are getting more sophisticated, by the hours. So that is a constant journey the technology industry is already in. So that this doesn't change anything here. That's my belief is that we are in the same situation today as we will be on the 20th of September. That the requirement on secure software and hardware and everything else goes for anything you do in this business.
Thank you, everyone, for your inputs onto that. So Nick, over to you. Talking about technology, are there many technological advancements and solutions that enhance the reliability of the electronic trade system? And if so, can you talk us through this?
I think there are, but again, I'd just like to preface this by saying the Act is technology neutral. It does not say you must use a blockchain. It does not say you must use a database. It does not say anything else. It just says you must deliver on the outcomes of the legal requirements, and gives some guidance about what other characteristics a system must have. But for me, and I hark back to the evidence that Professor Sarah Green gave at one of the sessions in the Palace of Westminster in front of the Lords, what was then the Bill Committee, where she really did emphasize that one of the sort of game changers, if you like, for the implementation of MLETR in the UK was the technical means by which you could tokenize uniqueness. So, we all know that if you have a document in a PDF, you can send that to 25 people and you've got 25 different versions of the same document. And that is no good when you need to replicate the paper document, which can only be in one place at one time, possessed by one person, and only passed by that person to one other person. So what the breakthrough here is the technology has enabled, however that is done, uniqueness. Through this piece of code, I can establish my good title to that consignment over there, and I can transfer that ownership through this code to but one other person, whereupon my interest and claim to ownership is extinguished. That is the major difference. Now, there are it is cryptographic hashing, there is PKI, there is blockchain. There are a number of technologies, all of which are understood and increasingly being used by the providers of the technology. But in a sense, I don't care, and nor does the Act, how that is achieved, only that it is achieved in that legal and it achieves those legal functionalities, and with those guidelines very much in mind. For me, just taking a slightly longer term look, is that I think there is a real opportunity for us here to combine technologies like Internet of Things, like artificial intelligence, like distributed ledgers, like public key infrastructure, and like LEIs into the same digital environment, and thus deliver on a really slick digital end-to-end and assured process for international trade, and to develop the sort of responsible and transparent supply chains that I think we're going to need in the future. But I think that will come, but that will come because it's been enabled by the Electronic Trade Documents Act and similar legislation that is also available. And the other point I'd just make, if I may, although the Act doesn't specify interoperability, I don't think there is going to be much point in having a reliable system that only operates in the UK. Because by definition, international trade involves at least one other jurisdiction, and they will have their own versions of MLETR, although I think there's a very healthy emerging consensus internationally about implementing it, and many countries, if they aren't already considering it, are certainly committed to doing so. So I think in the future, there is a world out there where most countries will be MLETR enabled in one way, shape or form. So within that idea of reliability, I think there must needs be an element of interoperability, and otherwise it's just not going to deliver benefits to the users. So that is why we are working with those international organizations like DSI, the Digital Standards Initiative, like WTO, like ITFA, like BIMCO, like DCSA, and trying to brigade that international efforts to ensure that what we do in the UK interoperates with what is going on else globally. And don't forget, something like 80% of all bills of lading internationally are governed by English law. So there is a fundamental change, not just to how we do things here in the UK, but how we do things globally. So I'm very much looking for our model to be based on that fundamental principle of interoperability as well as reliability going forward.
Thank you very much, Nick. Now, Sean, I guess looking a bit ahead, are there any foreseeable challenges in ensuring the trustworthiness of electronic trade documents?
So let me start off with what challenges there are, and that's technology. So I think as Nick and others, Patrick, have pointed out very well, there is a lot of technology around. There are different forms of technology. There are a lot of standards. You know, in the financial instruments area, ITFA has its standards. In bills of lading, BIMCO, FIATA, DCSA have got their standards. DSI with WTO and ICC have published a whole list of actually more than 20 pages of internationally applicable standards. So that is not the problem. The problem is something I think we've touched on a little bit earlier, and I think Nick tried to deal with, but it's really worth emphasizing, and which is that the Act has solved one big problem, and it's created this mini problem now of how do you prove that you've got a reliable system? And that's not something that, as a matter of law, the providers had to do. Now, people like Patrick and Nidia have been around for a while, and they're being used by banks. You know, they had some great success with people like Lloyd's, for example. And as has been mentioned, all banks, I work for a large Japanese bank. All banks have got extremely stringent onboarding standards, testing. We ask thousands of questions. So the issue is not that we don't think, as a matter of fact, that they are not reliable, and commercially they're unacceptably unreliable. That is not the worry. The concern is, well, now who's going to judge this? And I go back to the point I made earlier: if you don't have a reliable system, that's a precondition for having a valid electronic trade document. And if it turns out your system actually is unreliable, then whilst you thought you had this this electronic bill of lading or bill of exchange, actually it's invalid. And that's so the fear at the moment, which I think is unfounded, is that suddenly the judges are going to say, there's a very strict standard. This system is unreliable. I don't think they will do that. Nick has made the point already very well. This is not meant to be a higher standard. To go back to a couple of comments of mine earlier on, what the authorities in the UK and UNCITRAL are trying to do is to achieve a respectable replacement for paper. As I said earlier, paper is easy to use. You've got to do something different when you're using digital instruments. That system has to be reliable in the same way as when I write on a piece of paper, it's reliable. And we don't think of it in those terms, but actually putting ink on paper is a very easy thing to do. The result that I get is reliable, generally speaking, leaving aside fraud and so on. But the result that I get, the created document, is reliable. So they're trying to do a like for like. And there are, as I say, a lot of standards. So I don't think the judges are going to start saying, well, have you considered this standard or that standard? And I think another point that's worth making here is a reliable standard is not necessarily the best or the only standard for any given issue. There are a number of ways. So some people use blockchain, some people use registry systems, some people use, and there are different kinds of blockchains around. Some people use quantum computing to create the cryptographic keys. They're all reliable, but one might be commercially more attractive than another, but from a legal point of view, they're all reliable. And I think that is all, and I think Sarah Green has made this very clear, that is all the Law Commission wants to see, just wants to see that there is a respectable replacement for paper. So actually getting people to get over the hump of this slightly irrational fear is the problem that we currently have. And that's why, ICC UK, C4DTI, ITFA and others are working together to really get over this, because I do think, actually, although I can't say it because I'm not a judge, I do think that the systems used by the likes of Patrick and others are reliable. And once the market starts to accept that, I think we've got over that problem. I just want to elaborate a little bit on the interoperability point. I'm going to take a slightly different tack from Nick here, which is that it's not necessarily interoperability, which is at a standards level, but it's actually cross-border recognition. And I think this also goes to the reason why the trade associations are getting together with people like C4DTI, because one of the criteria that was mentioned is industry standards and sort of accreditation by industry bodies. And I think that will carry a lot of weight. If you look at what's going on, for example, in France, where it's likely to be a much more government-controlled system of approval of reliability. The question has been asked, well, what about if you've got a system in England that is being used in France, where you don't get accreditation by the appropriate French government agency? And I think the better the better the degree of trust you can have in the reliability of that system, the more likely it is to be accepted on a cross-border basis. And I think actually the best system for that is actually for people like ourselves, the trade associations, the government agencies. That's how I'm classifying C4DTI, because it sounds good from a cross-border perspective. I'm not sure Nick necessarily there that's legally the case, but to have people of that stature say this is a reliable system, I think will stand the test in countries that have different approaches.
Thank you very much, Sean. So we recognise that the significant work you're all doing, promoting industry best practices, regulating reliable systems, and thinking about accreditation in reliable systems. Thank you to our great speakers, Nick Davies, Patrick Zecker, Sean Edwards, and Miriam Goldby. So to conclude, we certainly have some key takeaways and considerations from this webinar. Firstly, how do we ensure the uniqueness of a document at any point in time? How do we think about reliable systems in the context of electronic documents outside of the UK? And how do we turn the current sentiment around trade platforms into a catalyst for open and interoperable trade? We'd advise reading the ICC UK Reliable Systems Assurance Model, and also the explanatory notes for the Electronic Trade Documents Act, which we've provided links to on the Tradecast Hub of TFG. Thank you also to our sponsors for this webinar, Enigio, in partnership with the UK Export Finance and Department for Business and Trade. Dipesh, back over to you for concluding remarks.
Thank you very much, Jordan, and thank you to all of our 18 speakers, our TFG moderators, partners, sponsors, and associations for supporting this webinar series, What Next for the Trade Documents Bill. So just to recap, on the 23rd of July, the King enacted the bill, the Electronic Trade Documents Bill. So it's now an act, and it's due to become part of UK and common law legislation from the 20th of September 2023. It's really important to consider what this means for trade documents electronically and also physically because of the permissive nature of the bill. And as you can see, there are many associations and organizations who are really preparing to help make trade cheaper, faster, and more accessible. Once again, we'd like to thank our partners, UK Export Finance and the Department for Business and Trade, as well as our sponsors, Sullivan, Lloyds Banking Group, and Enigio and Wave BL, as well as our key association partners for helping us put this webinar session together. Those are ITFA, the ICC United Kingdom, C4DTI, the Institute of Export and International Trade, the DNI Initiative, and BEXA for helping us make this possible. Thank you on behalf of Trade Finance Global for joining this webinar series. Many, many resources, documents, key publications, the Act itself and all supporting documents will now be available on the Tradecast Hub of Trade Finance Global, which can be found on www.tradefinanceglobal.com/Tradecast. Goodbye and good night.